Okay, first of all, I would present about the introduction. Okay, first, the stock, future and option are classes of stock derivative traded in the stock market. In the period of trial game trading starting on 31st October 2024 to 31st December 2024, have been given 50 maximum trade lots with no brokerage fee. By obtaining a RM, 1 million students are allowed to trade a futures contract to gain profit. The list of trading assets that are provided include crude palm oil future, which is FCPO, which is a contract between a seller and buyer in order to deliver gold future CPO. The Kuala Lumpur Composite Index future, which is KLCI, is a former name of the Malaysian Stock Exchange that was created in Kuala Lumpur to allow the trading of Malaysian securities. Okay, next I will explain about the crude palm oil futures, which is FCPO, and FTSE Bursa Malaysia KLCI futures, which is FKLI. Okay, first, the crude palm oil future, which is FCPO, is a standardized derivative contract that enables the trading of palm oil at the predetermined price for future delivery. Each FCPO contract represents 25 metric tons of crude palm oil and is denominated in Malaysian ringgit MYR. FCPO price is fairly volatile, basically driven by underlying demand and supply forces, weather and performance of substitution products such as soybean oil together with currency exchange rate against US dollar. A number of factors influence the movement of FCPO. The dynamic of global supply and demand, especially in key producing countries like Malaysia and Indonesia, are a critical driver. Other key factors include currency fluctuation and adverse weather conditions. Second, the FTSE Bursa Malaysia KLCI futures, which is FKLI, is a financial derivative product that shadows the performance of the FTSE Bursa Malaysia. Each contract of FKLI is settled in Malaysian ringgit and it has a multiply of RM50 per index point, also particularly appealing to a broad range of institutional investor and retail trader in their attempt at price valuation. Last but not least, domestic and global economic indicators, corporate earnings, geopolitical events, changes in interest rate, foreign investor activities, and market sentiment drive the price of FKLI.
Role of member: Nur Hashimah, leader, technical analysis and trader executive. Guide and motivate team to achieve organizational goals. Muhammad Farhan, technical analysis and trader executive. Analyze price movements and marketplace direction using chart and indicator. Nurul Shazwani, fundamental analysis and trader executive. Placing of order to buy or sell accurately and in due time in financial market. Nurul Inshira, fundamental analysis and trader executive. Keep an eye on indicator psychologies and world event to predict market fluctuation. Aisyah Umaira, fundamental analysis and trader executive, carrying out efficient trading in financial and commodity market. The three main factors that influence the price of crude palm oil futures (FCPO). First, supply and demand. Palm oil production can be affected by weather, like El Nino, which reduce supplies and increase prices. If stock levels are low, price go up. Demand from big buyers like China and India also push prices higher. Next is crude oil and competing oils. When crude oil price go up, demand for biodiesel made from palm oil increase, pushing FCPO price up. Also, if other oils like soybean or sunflower become more expensive, people may buy more palm oil, raising its price. Finally, currency and policy. When the Malaysian ringgit weaks, palm oil getting cheaper from other countries, which increase demand and rise prices. Government decisions like export taxes or trade rules also affect supplies and prices. In summary, FCPO prices are influenced by weather, demand or oil prices, currency changes, and government rules.
Next, I am Nur Shazwani binti Mazan and I will be explaining the factors determine of price KLCI. So to begin with, the most significant factor affecting FKLI prices is how the FBM KLCI performs. Since FKLI is directly tied to this index, any changes in the index will naturally impact the FKLI prices. Moreover, the index is driven by financial health of its listed company, corporate earnings, and overall economic conditions. When the economy is thriving, FKLI prices tend to rise. Conversely, weaker economic conditions can lead to declines. So next is macroeconomic factor, which the interest rate and monetary policy are set by BNM. When the interest rates are low, borrowing become more cheaper, encouraging business expansion and investment, which in turn drives up the stock price and FKLI values. So on the other hand, the higher interest rate increase the borrowing cost, making it more expensive for businesses and investors to access the capital. So as a result here, FKLI prices may come under pressure. Therefore, the trader closely watch BNM policies to anticipate the potential market movement. So the last one is global factors. Since the Malaysia's economy is closely linked to the international market movement in major indices like the SP and 500 and Hang Seng can influence the FKLI prices. So additionally to add that, geopolitical events, fluctuation in commodity prices, and economic conditions in leading the global economy contributes to FKLI price movement. Generally, a strong global market trends tend to lift FKLI prices, while uncertainty and instability can lead to the declines.
The bar chart shows that Muhammad Farhan emerged as the top performer in this simulation, securing a profit of more than 40,000. His impressive return suggests that he employed highly effective trading strategies. While Aisha Umairah also got positive result, earning around 5,000 in profit. Her return is modest in comparison to Muhammad Farhan's, but it still indicates a successful trading strategies that allow her to remain profitable. In contrast, other three participants faced significant losses, suggesting that their trading strategies may have been less effective. Firstly, Nur Hasima experienced a loss of around 30,000, which places her in the category by traders who struggled but did not incur the worst outcomes. While Nurul Shazwani suffered loss about 20,000, highlighting potential weaknesses in her trading approach. This loss might reflect a tendency to engage in riskier trades. Last but not least, the most severe loss came from Nurul Ishira, who recorded a loss of 28,000. This significant negative outcome indicates that the trading strategy may have been highly speculative, possibly involving excessive risk-taking or inadequate risk management. To sum up, the two participants who achieved profits likely follow a more measured and informed approach. On the other hand, the three participants who experienced losses likely encountered difficulties in predicting market trends.
Next, I will explain the most profitable and most unprofitable trading. First, I complete a futures trading simulation for Bursa Malaysia and I execute 50 trades. I had a net loss of 13,000, reducing the total gain value from 1 million to Rm 987,000. Throughout the whole trading period, get a profit amount to 22,825. However, this was a loss of 35,825, thereby yielding a poor overall performance of below par.
Based on this Bursa marketplace, focus on crude palm oil futures FCPO and FTSE Bursa Malaysia KLCI futures FKLI. Exclude 4 traders with a starting value of 1 million. Result ended with 10,41575 and the net profit is 41575. Total profit is 66650 and total loss is 25075.
Next, I have Nur Shazwan binti Mazlan recently participated in a futures trading simulation on Bursa Malaysia, focusing on crude palm oil, FCPO, and FTSE Bursa Malaysia KLCI futures. Over the course of the simulation, I have executed a total of 42 trades out of 50, employing a strategic approach that utilizes both long and short positions to capitalize on market opportunity with starting value 1 million ringgit. So, despite the structured approach that I have employed, the simulation concluded with a net loss of 70,075 ringgit and ended with a total of 982,925 ringgit. So during the simulation period, I have achieved some successful trades, generating a total profit of 26,850 ringgit. However, this gain were overshadowed by significant losses amounting to 43,925 ringgit, leading to an overall performance that fell below expectations. So with enhanced risk management practice and improved adaptability to market conditions, a portion of these losses could potentially have been avoided.
Assalamualaikum, my name is Aisyah Humaira. I have been participating in Dr. Intan Maizura Bursa Malaysia Trading Simulation and I have earning 1,005,925 and have complete 33 out 50 trades, demonstrate active participation but not engaged in the future contracts. 1,023,075 cash balance suggests a conservative risk management approach.
Next, I will continue with future trading simulation, whereby I already finished a future trading simulation in FTSE Bursa Malaysia KLCI future, which is FKLI, and crude palm oil future, FCPO. I used both long and short position to capitalize on market swings, making 44 trades out of a potential 50 during the simulation. Starting with 1 million, ended with 971,375, ended of the result got net loss at 28,635. It might be because of changes in the stock market index, which could have been caused by unpredictability issue. To sum up, I need to concentrate on strengthening my market research, adjusting the timing of trades, and implementing more effective risk management strategies in the future.
Strength of the trading. The simulation successfully applied fundamental analysis to guide trading decision in the futures market. We have been consider macroeconomic factors such as GDP, gross inflation rates, interest rate, and foreign investor involvement when trading FCPO. We also consider economic trends, company earnings, and stock market performance for FTSE Bursa Malaysia KLCI. It shows our dedication and responsiveness to market changes, demonstrate a desire to grow and learn. One of our members, Muhammad Farhan, successfully generated a positive return of 41,575 that demonstrate the potential of a cautious trading strategy for long-term success. The simulation also provides direct interaction with actual market conditions, enhance risk awareness and understanding of market dynamics. Weakness of the trading. The simulation reveals significant losses in trading performance due to the flaws in risk management and trade execution. Many players lost money, with some losing up to 28,925 in total. This suggests that they may not have taken sufficient precaution against adverse and market movement, and risk exposure may have been too aggressive. Next, controlling downside risk is crucial for futures trading, and the absence of stricter loss limits of hedging techniques. Next, poor market timing also contribute to the unfavorable result. And lastly, the high reliance on FCPO and FKLI, which are highly dependent on external influence, can be exposed to the risk. To lower total losses, players could have distributed risk across multiple market sectors. Next, recommendation for improvement of trading. Implementing a stronger risk management strategy to prevent large losses. Improving the performance of transaction and market timing to avoid losses resulting from early late traders. Next, by entering and leaving market with passion and planning and might avoid making quick judgment and suffering larger losses. Next, expanding trading options to include bonds, currency, and other commodities. Analyzing historical trade to identify trends, mistakes, and opportunities for improvement. Keeping a detailed trading record to document each transaction, including entry and exit points, trade evidence, and result. Lastly, consult with professionals, attend trade seminar, or read expert market analysis to have an improved understanding of industry trend.
Lastly, to conclude, the first one is practical application of theory, which this simulation provides hands-on experience in applying concepts from our derivative market course. While we had learned about futures trading in theory, executing actual trade gave us a much clearer picture of how the market operates. More importantly, we realized that success in trading is not just about understanding market trends, but requires strong decision-making skills, strategic planning, and risk management. Next, the important strategy and risk management. One of the biggest takeaway was the importance of having a well thought out strategy. Simply knowing the market trends is not enough, where trader needs to develop the structured approach to maximize gain and minimize the losses. We also learned that the market is constantly changing, so being adaptable is essential. Without the ability to adjust our strategy, we risk making poor decisions that could lead to the significant losses. So last one is challenges and lessons. Of course, trading comes with its fair share of challenges. Some of our group members faced losses, which emphasize the need through market analysis. This experience shows us that relying on intuition alone is risky. So using fundamental analysis and considering macroeconomic factors is critical when making trading decisions. Additionally, decision making in trading should not be impulsive. A structured approach, including the setting profit, target, and stop loss limits, help ensure that emotion don't drive trading.
Thank you.